really come down. We can see that. We can see that in a lot of the asset prices, a lot of things that we watch. We've been talking about that for a while. Nevertheless, how far is it going to happen? I guess we'll have to wait and see. But a lot of action here. Let's pull up some slides. Let's talk a little bit. Of course, we had today's inflation number. It's the first time since COVID that the core inflation declines. And big move in stocks. I mean, is it me or did the number come out a little bit early? You know, I remember seeing this in other times too. Another time, you'll see once these numbers are just really hotly contested, you'll start to notice some glitches in the matrix. And today was definitely one of them. A few minutes, about 3 minutes before the number actually came out, SPOO's ripped up already. That means somebody got the number ahead of time, clearly. But that paled in comparison to the actual move. I mean, we took off, right? Up 3% in a quick flash in a hurry. And we didn't hold the gains. As a matter of fact, for those of you who are technical traders, you know what I'm talking about. We dropped down to 40.37, kind of hung out there for a little bit. That's currently where the 100-day moving average is. I think it's 100, or is it 200? Actually, the 200, because the 200 is above, I believe. Let me double check. And we basically sat there for a little bit, right? And then we started to dip a little bit lower, but things never got, I don't think we ever turned negative on the day, oddly enough. Wait, let me just check this for you. I want to be right. Yeah, 200-day moving average, right? Yeah, we sat around there, and then we dipped a little bit lower, and yeah, it's a big range today, though, overall, 4% range today. You've seen a lot of names move around. I really wanted to know what the big range on some of these names today, because, for example, airlines, I feel like they were positive early in the day, and then they dipped down really hard. Not exactly sure what that was about. It's like some fund came out and just a bunch of funds came out and said, we just want to dump airlines right now. We don't want any part of it. Even though they were kind of bid this morning with the news with Boeing, which Boeing was bid as well because, of course, United, I think, came in and gave them some planes there, and that's been an interesting story overall. I'm kind of all over the place right now, but that's been an interesting story with Boeing, right? I mean, it's really been an interesting couple of years with them, but they seem to be starting to get on track. Nevertheless, big moves today in the market with inflation, of course, and big moves with volatility, right? I mean, we all know volatility ticked up sizably yesterday. VIX was up, even though the futures were not, which is really fascinating. And again, it's one of those situations where you saw VIX up, you saw the market up. Usually you get a little retracement in the market after that. I don't know if this fully counts, you know what I mean? It's still hard to make anything of this because, again, it seems like even though we've eradicated a lot of the gains that we saw earlier today, still seems like the market is waiting on what Jay Powell is going to say, right? I mean, we know that that's still out there and the market is waiting on that. So, it seems like front month options are still bid, not as bid as they were. But if you look at, for example, and we'll look at this in the platform later, if you look at front month SPY and or Qs and or SPX options, you'll notice that they're still kind of bid, even if it's not even including the ones that are pricing in for tomorrow. But they were still bid, waiting on Jay Powell yesterday, and we'll look at the term structure in that in a little bit. So, been an interesting, fascinating day. In the meantime, I believe heading into this thing, the expectations for rate hikes, right? We all know 50 basis points is essentially a foregone conclusion tomorrow. February is now where we've been looking to. And just a week ago, maybe even a couple of days ago, a 50 basis point hike was seemingly what we could expect for February. But now traders are pricing in a quarter point rate hike for February. So then you got to wonder what happens after that. Do we just hold? Do we have the whole stay higher for longer? I guess we'll see. Terminal rate seems to still be around 5%, and I think that's what you can expect in the meantime. Would a dovish Fed send oil back over 100? Before I get to this, folks, if you're watching on the Tasty Live webpage, come to the Tasty Live YouTube page. Hit the like and subscribe button. There's more stuff than me on here. There's good content on our Tasty Live page, so please do that for me, if you will. Would a dovish Fed send oil back over 100? Recently, we saw oil dip to yearly lows, right? As in 2022 lows. And a lot of it has to do with China, kind of doing what they've done in the meantime with the COVID zero. But we've seen that begin to turn the corner, right? I mean, they're not beating people and stuffing them in boxes anymore. They're allowing them to come back to society. And I think that's starting to see demand pick up. But overall, you got to wonder if for some reason the Fed starts to cut back and there is that actual output cut from the OPEC, will oil start to rise back up, right? I mean, oil only stays dormant, but for so long. It starts to really get a move on. But for now, it's really been quiet. And I'm going to show you what the term structure looks like. And it hasn't been cute at all. You know what I'm saying? But yeah, man, lots of going on, man. I mean, we got markets moving pretty big. This is a gift, honestly, for the third week in December. Usually right now, we're dealing with the Santa Claus rally. Every day, markets are just kind of trending up. Volatility steady at like 18 or 15 or something like along those lines. It's definitely below long-term average, usually around this time period. And we haven't quite seen that. This volatile year is not going away quietly. Another volatile day for CPI. As I'm actually glad to see it, because at least you know you can hang your hat on that. CPIs have been volatile. You got to wonder if that's going to carry over into 2023, though. Coming up next, though, leftovers. What causes you stress during the holiday season? Let's move ahead to the next slide. Have you guys done your holiday shopping yet? I'm not going to say whether or not I have or not because I know people are watching. You know what I'm saying? But most people say buying gifts causes them stress. 46% of you. Really? Is that because maybe you're not sure what gifts to get, or the idea of the logistics? I mean, because I'm not going to lie, like the idea of logistics they kind of get you stressed out a little bit. You know what I mean? Like they can, especially now. Whether or not something will arrive on time, I mean, we're getting at that crunch point now. And you're going to start to see that on the news. And you got to order by now. This is the last time to order for something to get to you. I mean, eventually the FedExes and the UPSs and the Amazons are going to start to get a little bit, tight with deliveries at some point or another. Spending time with relatives, 15%. I did not put that. I did not answer this survey. I did not put that myself. Hosting. Hosting can be a little bit challenging for some people. But I tell you what. The way to alleviate that, just say, look, this is my house. You can get the hell out if you don't like it. I mean, don't worry about it. You can do that. It's fine. Traveling is definitely something that stresses me out, used to stress us out a whole lot. We used to every year, I hope my mom is not watching because she's going to get mad. Every year we used to pack up the kids and we used to either fly or drive and go check out the family when they were little. And one of the reasons we stopped doing that had nothing to do with the parents. It had everything to do with the kids. We wanted the kids to feel like this is where you hang out. Santa actually comes here in the holidays. He's not searching around to find you with a GPS. You're right here. He's coming to visit you. And so, that's kind of what we've done for Christmas. We travel for other things, you know what I mean? But Christmas has been one of those time periods where we're just like, we're going to chill at home. You know what I'm saying? Cooking and baking, I guess that could stress a lot of people. I mean, if you're cooking and baking for a lot of people, that could be stressful, right? It's the same type of deal with Thanksgiving. And then getting sick, whether it or COVID, I guess. But, the idea of getting sick around the holidays definitely is something that most people don't want to deal with. So these are the things that stress people out. Look, if you're stressed out about buying gifts, go get them right now, right after the show. Go ahead and queue it up. Or you can queue it up during the show. It's fine. Let's move ahead to the next slide. Hey, what's going on with the, I know some of you out there watching World Cup. Argentina's winning right now, right? I heard Messi just scored. I think that's what's going on. I'm pretty sure they're still up 1-0. I couldn't believe it. I was messing with my wife the other day. She didn't know who Messi was. I'm like, you don't know who Lionel Messi is? He's one of the most, I feel, I mean, even if you don't watch soccer, you kind of know who he is, right? But guess what she knew who was? She knew who Ronaldo was. Of course you know who Ronaldo is. I mean, you know what I mean? Anyway, I digress. Our first chart of the day. The belly of the curve has really changed over the last 4 weeks. Although they look the same, but we've seen it drop quite a bit, even more so after Powell's speech on 11:30. And we've seen what the decimation has happened in the 10-year. Now, this doesn't exactly include today's moves, but we've seen yields. And yields are, down today, as you would expect, which is one of the reasons why the market is up. Of course, I don't think they've recovered some of their gains, actually. I think they're lower than they were early in the day. Yeah, actually, theoretically, it's not been a pretty day for yields. They're off the lows, but it's been kind of ugly. And you got to wonder at some point if this type of thing concerns, right? Looking at the 1 year and the 2 year compared to the 10-year. This type of thing has to concern the Fed going forward a little bit. But I think until we see something change fundamentally with the job market, I think they're going to be fine. They're going to be fine moving forward. They're going to be fine with it. We'll see. Let's move ahead to the next slide. Do you know that the European stock ETF is now down less than the SPY since Russia invaded Ukraine? Isn't that something? I mean, the Fez was affected a whole lot more than SPYs, but, and again, I mean, different things have affected these two at different times. Obviously, we started raising rates sooner, and I think that's when you saw the big drop, obviously, as rates started to take effect. Our first rate hike was in March, of course, but then you got to June, and then you got to September, and it's interesting how European markets have kind of bounced back to some degree as seemingly some stability has happened, but still, it's kind of interesting. Even though it's like the slightest margin, SPY is down lower than Fez. Kind of fascinating, right? I mean, we thought for sure this would have been something that would have affected European markets a lot more than SPY, and it did. But it's interesting to see the kind of year that we've had. This is going to be a year you're going to have to remember. This is going to be a good year for trading education. This is one that a lot of you will be able to put on your badge, of trading courage and say, I traded through 2022 because it's been a crazy year. 2020, 2021, 2022, this reinforces the idea that volatility seems to come in packs. I mean, it just does. You kind of always notice that. Let's move ahead to the next slide. So this is what I was talking about. For those of you who closely follow crude, or if you follow this show, because I've been talking about this for a while, looking at crude over the past year has really been fascinating, man. For this, you got to know the difference between backwardation and contango when you're talking about futures, right? Contango, usually the front month futures are trading lower than the next month, which is kind of happening to some degree. I mean, it pretty much is. Let's just say it is, right? You look at the Jan futures, you look at the Feb futures, you look at the March. Each one is consecutively higher than the next, right? That's kind of what contango looks like. When you talk about backwardation, this thing is pretty much a straight line up, and that's what the crude futures curve has looked like for majority of the year. And now things have really started to really calm down in oil. When we looked at this in the summer months, obviously when oil was going nuts, when it was well over 100 and touched like 130 on one day, this thing was in strong backwardation because that's when there was a lot more demand. And now things have really calmed down. Of course, that's why you're seeing these lower prices at the pump. Interest rate rises have eliminated the backwardation from the oil futures curve. Kind of fascinating, right? I tell you. And energy futures let's move to the next slide. The hits keep coming when you're talking about some of these other energy products. Looking at nat gas. Haven't looked at the nat gas futures curve in a while. Wanted to look at it a little bit. And I got to tell you, I was looking at this recently. I haven't compared it historically, but looking at the Widowmaker spread, which is essentially looking at the spread between Feb and March natural gas futures, you can see it's nearly $1 wide. Now, that's fairly wide to some degree. Historically, I'm not sure. I just think it's fairly wide given recent times. That's the time to mark sort of when winter kind of starts and when winter might start to end, right? And so that's really usually a volatile time period for natural gas. Can be. I shouldn't say usually. Can be a volatile time. Looking at that difference, it kind of makes you wonder what this year is going to look like. I know a lot of you in the Northeast are already dealing with some weather conditions, from what I understand. I think that's one of the reasons why nat gas is kind of elevated. And I think a similar deal over in the UK, right? For my friends in the UK, I think you're dealing with some weather issues right now. But this is something to keep an eye on, what nat gas is going to be doing over the next couple of months. It's a volatile thing. I generally don't trade it. I like looking at it. It's a measure I pay attention to day in and day out. I'll usually call it out when we get to the platform, which we're going to get to in just a bit. But it's kind of interesting looking at that difference between that Widowmaker spread. So keep in mind, $1 wide today, December, what's today? Oh, December 13th, yeah. 12 days to Christmas, just so you know. Let's move ahead to the next slide. I am not interested in any earnings whatsoever. Earnings are not moving me right now, and I don't really know how many towards the end of the year are going to interest me. Weber Grill is the only one I kind of recognize, and I just put it up just for the hell of it, but I'm certainly not trading it. I think it's a $14 stock. I don't know. I mean, what you know, why? It's an $8 stock. Yeah, don't care. No hair, don't care. FOMC rate decision, of course, is tomorrow. It's usually not the rate decision. It's usually the talk after, right? And so we'll see what happens. We'll look in a second and see what the spies are pricing for this potential move. Coming into today for this CPI, spies one-day options were or front month one-day options were pricing a 2.2% move. We got a 4% move in the range, up and down today. So I wonder what we're going to see today. Again, the CPIs have been more volatile than the FOMC. When you talk about today, when you talk about November 10th, and when you talk about October 13th, those have been really volatile days. October 13th is probably the most volatile day of them all that we've seen so far. So we also have ECB, European Central Bank, we have Bank of England, and a bunch of other rate decisions. I think the Bank of Mexico, I can't remember who else, maybe Norway, a whole bunch of other rate decisions that are coming out on Thursday. It's like they're trying to get them all in before the end of the year. And then, of course, we got triple witching expiration, which is a bunch of options and futures and index options that are expiring coming up on Friday. So it should be a big one. Number of S&P 500 stocks above the 50-day moving average, holding pretty steady. And I'm telling you, these things seemingly revolve around big SPX strikes. We're close to that 4,100 strike, it would seem. And we're up more than 81% of names in the S&P 500 are above that 50-day moving average. This has been one of my favorite metrics. I've talked about it every single day. I've talked about it all year for the last 2 years, basically. It's interesting to watch. It gives you an idea of the health of the market, right? Where things are right now. I mean, you could do this also with a bunch of others. You could do it. When things were uglier in the year, we probably could have done this with the 200-day moving average. When things are really, really good, you can probably do this with the 10-day moving average, right? That just lets you know probably how extended stocks are. So that would be an interesting one to watch. But I think we're ways away from an actual bull market, so we're not going to see that type of thing in a while. Let's go to the platform, please, sir. Looking at markets. I've done a couple of trades. I'm going to have to show you that in a little bit. First, let's look at this expected move. $8.35. Let's just call it 2%, right? $8, $400 stock. And I'm going to guess most of that is, if it happens, it's going to happen, after Jay Powell speaks, more than likely. I don't know. It's kind of the way it's been for the most part. We haven't gotten a huge move. We haven't gotten a huge move for the most part ahead of the actual rate decision, I believe. I mean, because I don't think there's been too many surprises. I think there was like one of them that was surprised, but for the most part, they've been fairly on. In the beginning, it was, I think the first big surprise was when we had a 50, we had a 25 and a 50, and then we had the 75. I think that was the first big surprise, and that was sort of spurred on from a CPI. I don't think today's CPI is going to change tomorrow's move. I think it's already done. So keep that in mind. We got SPOOs sitting at, it's right back at that level, which is basically where the 200-day moving average is, sitting at 40.36. We got NASDAQ at just under 12,000. We got Russell 2000 at 1840. You got the 2 years now almost under 4.2%. You got the 5 years sitting at, between 3. It's kind of wide. These are kind of wide today. I don't think they know where to price these. I mean, this is kind of wide for the 2 year and the 5 year, I would say. This is, what is that? That's like basically 14 basis points wide in the 5 year. 5 year is kind of wide sometimes. 10 years right on, though, 3.5, right? 30 year, also about 3.5. It's very slightly above the 10 year. Then you got December VIX, which expires next week on this day. Next week, Wednesday. December VIX expires, so what's that, the 21st? January become the front. Look at the difference between December VIX and January VIX. Right now, it's about $2.10. And then you got February VIX, which is $24.95. Oil has been on the rise over the last couple of days, up 3% today. And nat gas up 5%. You're talking about Bitcoin. This was briefly above 18K today. You're starting to wonder if how do I want to say this? Starting to wonder if the near-term bottom is in for Bitcoin, devoid of any other really bad negative news. You're starting to wonder if maybe it's starting to calm down a little bit. Same thing with Ether. It's been hanging around. Bitcoin's been hanging around between 17. Again, obviously it's a little bid today. and Ether up above that psychological 13K level, 1300, excuse me, level. Gold was up. It still is. Yeah, up 1.6% today. I'm not going to lie to you. I actually don't fully understand the gold level. Grumpy Mike, my main man, what's happening? In the chat, yes, sir, I did predict it. As long as it holds, you damn right I predicted it. And again, that's just based off of moving averages. Sometimes they work, sometimes they don't. But it seems to be working right here today. Grumpy Mike, you got few gifts, no travel, still a ton of holidays. You said that right, man. Few gifts, ton of travel, still not a fan of the holidays. I know when you're Grumpy Mike, you wouldn't be Grumpy Mike if you were a fan of the holidays. You know what I mean? I understand. And then, yeah, silver's actually, for the most part, had been outpacing gold. It still kind of is, looking at 24s in silver today. I haven't looked at the grains much recently. I really hadn't been paying much attention. I know corn had a big move, I thought. Oh, maybe it didn't. I thought I saw something about corn making moves, but I guess it's kind of chilled out for the most part. Interesting moves today when you look at different stocks. Obviously, the big one everybody's talking about is Tesla. I want to do something in Tesla. I should have maybe sold some downside. I didn't do it today, though, and I don't want to do it here. I want to see where this thing is going. There's a lot of hubbaloo, is that how they say it, around Tesla these days? And I'm not quite sure the make of it. Other than that, I've been known to trade the FANGs quite a bit at times. I haven't traded any in the last couple of weeks. I've mostly been 75% in cash, at least since Powell's last speech, which was on the 30th. But I got back in a little bit today. I rearranged a couple of positions. I've had these, and I've talked about them in the past. These zebras, some of the first zebras I decided to put on, I put them on, and I'm actually trying to close out my other one right now. But I rolled down the one that I had. I've been losing money on it in Citi. I figure it's fairly low IVR. I want to see what the banks are going to do come earnings time. And has it moved away from me? Oh, damn it. It's moved away from me. I'll just cancel it for now. If I got to hold this longer, it's cool. Because market faded, I think, right? It was actually up a little bit higher. So I have the zebra on in Citi. I currently have double zeros. I don't really want that. I want to be able to close one of them out. And then I got Wells Fargo. Got a zebra on in here. So those have been some of the main trades. I actually put some zebras on. We were talking about these airlines and how they took pretty big dips today. I actually put zebras on in Delta Airlines and UAL. Just those two alone. I figure I'll do a couple here and there. You don't want to get too concentrated on any one given area. So that's it. I got a laundry list of things that I'm interested in right now. I mean, honestly, I would love to see Tesla continue to fall. No diss to you if you're long it. Yeah, Booty Sauce. Good God, that is a great name. Yes, Booty Sauce. I'm not going to say it again because I'm going to laugh too hard. Yes, I was 75% in cash until today. At the moment, I'm probably about 50% in cash. I used a little bit today. But I just really hadn't seen anything I was interested in. And I don't really know how many more positions I'm going to add towards the end of the year, to be honest with you. I just want to see, something one way. I want to see us either flash up to 4,200, which I was actually really hoping for today, or dip back down to 3,900, honestly, before I get interested. And I want to see volatility either down back to that 19, just below 19 level, or I want to see it back above 25. So I really want some wider. I want to see some extremities on these ranges. You know what I mean? And I that's kind of what I'm waiting on. In the meantime, I'll look for areas where I think is interesting. I probably should have sold some Tesla today. I was actually looking at an iron condor, if I'm gonna be honest with you guys. But you know what? I feel like every time I do an iron condor in Tesla, it just never works out because the stock just moves so much, even if vol is high. So I didn't feel like pigeonholing myself into that again. Wasn't really interested. So as we close out here, keep an eye on markets tomorrow. We got Jay Powell. I'm pretty sure things are going to be fairly quiet. And until basically we get, you know how these go, right? Nothing happens most of the day. Policy decision gets here, it comes out, and then we still kind of just wait. And then he talks. And then after that, maybe market moves. Maybe if it doesn't, maybe it waits till the end of the day. And then, of course, we got expiration coming up on Friday, which you can bet there's going to be shenanigans on that. But that's all I got for you guys today, man. Thanks for listening. And as always, be smart, be patient, trade small, trade often. I'll see you guys later.
Like the